Give us some context here to the numbers, because Uber, obviously a privately held company, not publicly traded. They still disclose these numbers nonetheless. Who are they disclosing them for?
They're disclosing them for the eventual public investors. Their hope, the CEO has privately expressed interest in going public as soon as the first half of next year. And so they're trying to make themselves seem more like an open, transparent public company. And they are larger than most of the companies in the Fortune 500. They're trying to be transparent, which is unusual for a private company. And so we get these numbers every quarter, and they're astronomical, as you can see, 1.1 billion in a quarterly loss.
Well, Mark, I mean, the transparency is great, but one thing when we have IPOs, as everyone thinks Uber is on that path to it, the growth that investors usually are looking for out of an IPO seems to have already occurred in Uber. I mean, it's such a late-stage company. If they do come to the public market, what type of growth is left in this company? Where are they going?
Well, that's the story they're trying to break into with these numbers. I mean, you look at the main overhead numbers. Revenue slowing substantially, losses still increasing. They're saying, yes, we're losing more because we're investing in all of these amazing new businesses beyond ride-hailing. And so, for the first time, they opened up some numbers to us on their food delivery operations, which they outline represent. I think around 17% of their gross bookings. So it is becoming a substantial business in the scope of their core ride-hailing business. And then they have some very nascent operations in scooter rentals and electric bicycles and autonomous cars is an effort that they've invested probably billions of dollars into at this point. So those will be the stories. You'll probably be hearing more for them as they prepare to go on the road for an IPO next year.